Well, what a wild past week we've had in the markets with bank implosions and Bitcoin's price crashing and then having a strong rebound. I've spent the last week just completely dialed in. And whenever there's a lot of emotion and confusion in the markets, that's where I typically thrive as a trader. And so in this video, I'm going to walk you through exactly my analysis of the past week and the dip buy that I had in Bitcoin and some thoughts going forward. I just think there's a lot of really good lessons that we can pull out of the price action and a lot of the news that's been happening over the past few days. So let's go ahead and jump right in. So let's start with an overview of actually what's happened over the past couple of months. So coming off of an extended bear market, Bitcoin basically coiled up and started to consolidate down here around the 16 to 18K range. And then back here in January, we had a short squeeze that took price from about 18K up to 25K, which is major resistance. And then over the past month, we've had a lot of consolidation inside of this range. And over the past few days, we had Bitcoin that dumped pretty hard into support. And then over the past couple of days, over the weekend, and today here on Monday, had a really aggressive bounce. And price basically bounced from this pivot low a little over 25%. And that's where we are as of right now. Now, the reason why this is all happening is obviously because of the bank implosions. And I'm not going to go into a lot of detail about what's happened. There's already been a ton of coverage on that. But basically, several major banks have gone bust. And it's the current environment that we're in with interest rates getting raised at record paces and banks just being in really weird situations because of that. And so what happened is over the weekend, there was thought to be contagion. And there were some bank runs that were starting to happen late last week. And so the fear was that here on Monday, there was going to be mass bank runs and thousands of startups that went out of business. And so over the weekend, the FDIC and the Fed got together and basically said they're going to backstop all of the deposits to try to stop a bank run. Now, whether that was good or bad or right or wrong, I don't want to discuss that at all. Let's just talk about how to make money in these markets. So what I'm going to do is walk you through my thought process from last week through now and show you some watch lists and some price alerts. And again, this is not financial advice. This is just showing you what I do. And hopefully you can pull some lessons out to help you become a better trader or investor. And so going back last week on the 8th of March, Bitcoin was looking really heavy. And I posted a watch list saying, watching for a washout on Bitcoin today. It was basically bearish on all time frames. They were looking really heavy. Up here in the top left, this was the monthly getting rejected off of the 50-period moving average. Down here in the bottom left, this is the Bitcoin 1 weekly chart, which was also getting rejected off of major resistance. And then here on the daily chart in the top right, it was in between open air. And I was saying, hey, I'm looking for a washout to 20,000. And so this is what I do. I try to think like a chess player in the markets. I'm thinking 2 or 3 steps ahead. And I create these if-then statements, which means like, if the market does this, this is how I'm going to respond. And that's how I set up my trades ahead of time. And so fast forwarding a little bit, I'll just show you some of the price alerts and some of the trade alerts that came in after that watch list. We basically had that washout here on the 9th. So the next day, we had the stock market that was crashing through major support, and that also caused a cascade effect of selling where Bitcoin broke down from 22K and it was making a run for my buy zone that I wanted to get in around 20K. And then fast forward here on the 9th, this is where I actually started to buy. So I sent in some trade alerts. I started to buy in the 20,000 zone, and then I scaled in as low as the 19K zone. Once we were in between the 100 period and the 200 period moving average on the daily chart. So again, the way that I prepare is I look at the markets, where they're at, and I think about the possibilities. What could make them go up? What could make them go down? And I think about where are the highest probability areas to either buy or sell. And so we were gifted. I say that, kind of facetiously, like we were gifted with this whole bank run situation because it caused a washout in price. It caused panic. And as a trader, if you learn how to control your emotions and be disciplined and oftentimes do the opposite of what the mass majority of people are doing, that's where you can get into these markets at discounted prices and you can sell when everybody's losing their mind with euphoria. And then jumping back in here, you can see here on the 10th, which was Friday, I basically did a recap for the community and said, here's what's happening, right? There's fears around Silicon Valley Bank failing and obviously Silvergate's failure and all of these just different news events that were causing this emotional dump. The US government moved $1 billion worth of Bitcoin, and no surprise, we had really high liquidations as price dipped into my buy zone. And that's why I was able to buy almost the pivot low there because I was buying into other people's panic. And then fast forwarding to market close on Friday, we saw that there was a really heavy close for stocks, meaning the stock indices like the S&P 500 and the NASDAQ were testing major support and looking like it was going to break through it. So there was a lot of fear going into the weekend, right? And so I said, my best guess is that we're going to get a gap down on Monday, meaning when stocks open this morning, and then a potential short squeeze throughout the rest of the day. Because my guess was over the weekend, the Fed and the FDIC was going to figure something out to stop a contagion of bank runs this week, which they did. And this is what makes trading and investing so fun, is when you see all of this stuff come together and you see the behavior of the mass majority of people and you see how emotions play into the price action, you can go in and snipe and make a lot of money. And it's still pretty early in the day, but that's exactly what we got is from Friday's close. Here on the SPY, we had a gap down and then a bounce to close the gap. And that also coincided with a short squeeze here with Bitcoin, right? And how do we know it's a short squeeze? Well, you can look at things like liquidations, but whenever you have price that rips about, 20, 25% or more in a couple of days, what that is caused by is obviously dip buyers like me stepping in, but also people that got overextended to the short side, they start covering those shorts and it creates a waterfall of buying. So, anytime you have a breakout or a big dip and you have a V bottom bounce, it's both sides of the market that contribute to that move. And so that's what we're seeing today. And if we zoom out, you can see that we have a really just kind of strong reversal signal here in Bitcoin, where after being in an extended bear market from the pivot high, which was here in November of 2021 to about here in mid-January, so over 400 days worth of a bear market. And this was really the first sign of strength. Once we started to make higher pivot highs in the market, and then we had a little bit of a trap here where people got a little excited too early about 25K breaking. And then the bank situation happened. And as of right now, we have higher lows, higher highs, and we are getting pretty close to the time frame for the next halving, which is going to be here in May of 2024. Which is typically where we see, 6 to 9 months prior to that halving is where we start to go back into a bull market. So are we going to go into a full-on bull season? That's yet to be seen, right? But as of right now, price action is starting to look stronger and at least starting to show us that kind of turning in market cycles, right? Where it's starting to flush out a lot of it's already flushed out a lot of the weak-handed buyers that bought at the top of the market. And it's now starting to trap shorts, right? People that are getting aggressive on the short side, it's starting to rip their faces off. So one thing that is important to think about right now is the fact that the US government is not being shy or playing coy with the fact that they are trying to cut crypto off from the banking system. We just saw 3 major banks go under that were pretty much the lifeline of crypto to the US banking system. This is no surprise. The SEC and the Biden administration has basically been very explicit about the fact that they don't want crypto in the US. And that's why I've said over the past year or two, I'm being very conservative with altcoins. I think there's still a lot of alts that just need to die a bloody death. But Bitcoin is the ultimate Mac Daddy. It is the honey badger of money. And right now we have people waking up to the fact that, hey, Well, two big things. One, if the government can just print trillions and trillions of dollars like they did through COVID, how much value does the dollar really have? And two, how safe are those deposits in banks? So I've been beating the drum of self-custody, right? Holding your own assets. And here's what I mean by that with self-custody. It's the safest is where you hold your Bitcoin on a hardware wallet or in a multi-sig wallet, or if you have physical cash or physical gold, right? That's what I mean by self-custody. You hold it, you control it. There is no counterparty risk. And then kind of medium risk is when you have USD in a bank, like a FDIC insured bank account that's linked to exchanges, right? A lot of people say, well, what about, stable coins? Right now, the stablecoin market is very, very high risk. I'll save that for another video, but we recently saw the USDC and DAI become unpegged over the weekend because it turned out that Circle had billions of dollars with SVB. There's just systemic risk. There's counterparty risk with stable coins in general. But if you hold them on a hardware wallet, at least you don't have exchange risk there. And then obviously the highest risk is when you have Bitcoin on an exchange, stable coin on an exchange, or even like gold in a custodial vault where you're trusting someone else to protect that gold. And then also we can even add bank accounts that are above the FDIC limits. And even that is not really protected in the event of a complete banking meltdown. FDIC only really can cover just a tiny, tiny fraction of the actual deposits in US banks. And that's why I tweeted this today. I said, people are waking up to the importance of self-custody, and Bitcoin is the honey badger in a fragile legacy financial system. So at the end of the day, for the past 10 years, I've been tackling this whole Bitcoin thing from two angles. Number one, I look at Bitcoin as the best form of money that humans have seen. And number two, I look at it as a tradable asset that I can use to hyperdrive my wealth. And it's worked really well for the past 10 years. And that's why I'm here doing these videos for you, is to help educate you and just show you what I'm doing and show you the importance of self-custody and the importance of, even if you're not a quote unquote day trader, just understanding how markets work, how mass human psychology works, and how you can put yourself on the right side of the market. So if you want to trade alongside of us, I'll link up our wealth building community in the description. If you have any questions, feel free to hit me up on Twitter. Watch out for impersonators. There's a lot of them out there right now. But I hope this video is helpful, guys. If you have any questions, feel free to throw them in the comments. I'll read every single one. Like it up, share it up, and I'll see you next time. Stay safe out there.